glass. At the bottom of Yoda, it says, "May the momentum be with you."
That's going to be the title of this video. That's the title. I know I
May the
did that.
momentum be with you.
I did do the magnifying glass. I
Mm.
saw that. I'm like, I got to see what that says. And
You're probably one of the few people that have, Chester.
that's totally what's going to be the title of this. Since I can't use Yoda, I would use Yoda if I could, but I can't.
Yeah.
So I'll just,
No.
the title is going to be "May the momentum be with you."
That's good. Things I was trying to get across and I didn't is, kind of the priority of analysis is first look at the market environment, if you will, because, the market itself, what's going on in general, has the biggest effect on whatever, you're buying, whether you're in oil or commodities of any sort, or the stock market, and whether you think that Apple is going to go to $5 trillion cap weight or not. It's the old saying, the rising tide lifts all boats, and the falling tide also drops all boats. Not necessarily equal, I'm not saying that, but at the same time, as a lot of people would say, it's a lot easier to make money when you have the wind at your back. And when the wind is blowing in your face, sometimes it's good to do nothing, or to just wait it out, than it is trying to take and push it. And if you get so much pressure on yourself or anything else to do well every day or every week, that's going to be probably a recipe of taking excessive risk, and it's gonna come and get you. It'll definitely come and get you.
Yeah.
I
I did a formal analysis one time on stochastics. I really thought, okay, if it's a normal distribution, then you can do some basic stochastics on it. And the problem is the kurtosis of the normal curve.
Mm-hmm.
And that's a complicated word for just basically saying they have a lot of tails at the end, and those are basically just black swan events coming back to the news. And you have COVID-19 is a perfect example. You trying to do stochastics during the pandemic and everything falling down flat, you got crushed. You got absolutely destroyed because it would probably went 8 sigma outside of its normal stochastic range, which should be an impossibility, but it was normal for about 3 months there that it would be that insanely bad. So yeah, that's scary to hear that someone tried doing that with millions of dollars. Makes me wonder why I don't just manage millions of dollars again.
Well, it's a rough business, and as you say, what we saw starting in February and going into early March, was like the proverbial waterfall.
Yeah.
And boy, the old saying, you can't catch a falling knife. And I tell you, I was the most surprised person in the world that it was a V-shaped bottom, because normally, the distribution at the top was pretty classical. In retrospect, I've spent a lot of time looking at, could I have caught this sooner? I didn't write it all the way down by any means, but at the same time, could I have put a hedge on? Could I have been a little bit more conservative, taking risk off a week or two before? And a lot of the signs were there. But the thing that kind of gets me is, the spike at the bottom and then come roaring back. I don't know anybody who caught the top, sold at the top and then bought at the bottom.
I'll tell you my story. So I hadn't bought stocks for about 2 years. All during Trump's presidency, I pretty much haven't bought stocks. Not because of him. I don't want to talk politics, but just because, just because I thought everything was overvalued.
Yeah. Yeah.
And my analysis is pretty good. I'd love to share it sometime. If you want another value guru, I'd be happy just to give you thoughts and tips on what I'm thinking. But my value analysis will never can take momentum into account. So I was wrong. And even in January, I made a post on Stockteamup. I said, man, I think everything's really overvalued. And then everything collapsed. And it turned out my analysis went from being overvalued to being everything is super undervalued.
Yeah.
incredibly undervalued.
Yeah.
And what I did was, this is my scientific approach. There was a day when I looked at my analysis and it said everything's undervalued. And I said, okay, I'm going to wait 2 more weeks, because just because everything's undervalued doesn't mean that the market agrees with me. So I
Hmm.
waited 2 more weeks, and I think it was the second, it just coincidentally happened that I was like, okay, it's time for me to start buying like crazy. And it coincidentally was during the second circuit breaker of in March.
Great.
And I was like, I was cursing. I was so angry. I'm like, why can't my trades go in? This is ridiculous. And I
Hmm.
realized, oh wait, there's a circuit breaker. Calm down, there's a circuit breaker. So I bought like crazy that day. I bought, I think, 85% of my portfolio that day, and
Great.
I bought. I then after that I bought some Tesla probably about 2 weeks later. But Tesla's the only one I hold now, because as crazy as it was so low. I feel like it's overvalued again. It
Oh
went
yeah.
right back to being overvalued. So my assessment is still the same from January. It's just so that was my thought process there. So I caught the knife, but I didn't. I wasn't. I was already out of the market, so I missed out all the upward trends in 2018 and 2019.
Well, yeah, that's okay. The thing is, I hate to say it, live and learn, but at the same time, you pick up, you learn something. I learn something new every week, if not every day, uh, about the stock market, because and it's a dynamic environment. Rarely does it do the same thing twice, anyhow. But yeah, I was expecting. I mean, I fell into the trap of everybody saying, "Well, it's going to be a W-shaped, bottom. There's going to be a second dip," which is pretty typical of a major correction like that. And kept on expecting it, and said, "Well, that's what I'm going to wait for, if you will." And it just kept on eking up higher and higher. And uh, it's always interesting, There's and the thing probably should mention too with people, uh, which is very much Wyckoff theory, is he was a big fan of scaling in and scaling out, and I am as well. He would typically do a third, a third, a third. I typically do a half and a half, and kind of scale out the same way, because it doesn't make any sense not to do that, because transactional costs now are so cheap. Uh, and we could get into that. Everyone says, "Well, geez, I trade at Charles Schwab, and I don't pay any commission at all." Yeah, you do. Oh, yes, you do.
Oh yeah,
You don't see it, but you do. It's called paid for order flow, and they get paid. Sometime 1 or 2 or 3 cents. So you're paying a little bit extra on the price for zero commissions, but you are, paying for it. Anyhow, I digress. But it's okay to scale in and scale out, and that way you don't feel like you have to be right away. Uh, you know, uh, and I think that's a good approach. You can feel like satisfaction. Hey, I did get it at the lowest price, or a pretty low price, and I waited another 2 or 3 days or a week, whatever, and I bought at a higher price. But that's okay, because look, it's still going up. So
yeah,
uh,
absolutely.
you don't have to jump in with both feet, is kind of the bottom line.
I agree with you on that. This rise up has maybe learned two things that I will start probably doing moving forward. One is this: I agree with you on. I mean, just hearing you say it, I now think it's the right thing to do. I'll start to. I'll always ease in moving forward, either in or out. The second thing is, uh, the momentum. Man, it is with you. I, I've learned it from the hedge funds. I've learned it now again, and the next time I do this, I'm going to probably, I know we talked about limit orders and how they're going to just wreck you, but I'll probably do limit orders and let it continue rising and just keep my, maybe 5% or 10, probably a 10% drop limit order um, on all these stocks, because I still think the market's wrong, but that doesn't mean that I'm going to make money on it. So I need to probably let the momentum continue. And if I can do that, that would probably complete at least my investment strategy for now. I always fail to stay in long enough. Um, I've always been, I've always been happy with 30 to 40% returns, and I think that that's poor, a poor way of looking at it, and I've learned that over the last decade.
Well, I've listened to a few older, I'll say, stock traders, and for about the last week, they've been saying kind of same thing you have, Chester. Is I got in March, and I've made. In the case of trading stocks, he said, "Geez, I made over 100%." Because I've been getting growth stocks and tech stocks, and I've made over 100%, and that's unnatural. The market is overvalued. What is it? The overvalue for the S&P 500 is roughly in the low 20s. PE ratio 22, 23, and here is Apple that I think is 35. Hey, it's worth what anybody will pay for it. But the other thing I tell people, the old saying, it's better to be out wishing you were in than in wishing you were out.
Yeah,
and
absolutely.
Seeing what was kind of, I haven't looked over here lately because my screen went to screensaver, went blank. But there was a a good chunk of people getting out of the market here this morning. I don't know what's doing quite this 5 minutes, but as I say, it was kind of overdue. I'm looking at a combination for market timing of McClellan oscillators, but it's a long story. I'd have to bring up a chart to show you what I'm looking at. It's very non-conventional. It's looking at market structure, not really magical levels or numbers, but also looking at that as a confirmation with VIX, what the VIX is doing and what bonds are doing. And I could probably expand that out to more what defensive sectors are doing, because the last 2 days there's been kind of people stepping back from tech, and all of a sudden when you start to see utilities and wireless and defense sectors doing really well, and the TLT kind of kicking up, because it's been extremely low recently, but now it's kicking up a little bit.
Yep.
And the VIX going up for the last 4 or 5 days. People, the big guys are being cautious out there, because a lot of people don't realize too is most mutual funds have to be invested 100% of the time. So if you think the market is due for a pretty good correction and you have to be invested, what you do is try to find a relatively safe or a low volatility sector, to take and hide out in.
Yeah, I mean, I'm looking right now. Nasdaq's down 4.3%. Dow's down 2%. I don't even. I'm not even concerned. Well, I'm out, so I'm not. I only own Tesla at this point, so I'm in cash.
Tesla's down 20. Oh, sorry.
I'm looking at it right now. It's down 7. It's down 7%. I'm not even concerned about it. Like and I tell people, like, I 3x'd on Tesla, but it doesn't matter because I can lose 50% of that tomorrow, and that's just part of it. I'm going to hold that for a while because I've given up trying to trade it. It's a pointless endeavor. I'm just going to let them go, and if they continue to innovate, the stock price will naturally go up. So,
and the last phrase, it came from Will Rogers: "Buy low and sell high." You've heard that before. Well, what Will Rogers said is, if it doesn't go up, don't buy it.
Yeah. There you go.
What could be a simpler formula than that, right?
Takes a whole lifetime to master that, but it's a very simple formula.
Yeah.